So Martin, I've got a lot of clients coming to us at the moment that are talking about they've either got their principal place of residence and they're looking to get into their first investment property, or they've got their first one or two properties and they're wondering, how can I then leverage myself into the third or the fourth property?
Beautiful.
In terms of finance structure, what's the best way to go about? We'll start with just owning your own home and trying to get the first one. What type of finance you should go down?
No, perfect.
Yep.
I think the most important thing for anyone out there considering to build a property portfolio or already on that process is understanding your end game.
Yeah.
So you don't want to buy anything without knowing what's the purpose of each property. So I would always recommend to a client, Andrew, how many properties do you want to buy? Why do you want to buy them? What's the end game?
Yep.
When you're looking at finance, especially in today's finance market, it's really important that you understand that for the way we then set up your finance and that finance structure to help you build your portfolio. Because we're seeing a lot of people out there get stuck at one property or two properties.
Yep.
They may have the capacity to do more, but the way their finance is set up is actually then disenabling them to do so, or adding extra risk, which is just not needed to be there.
Okay. So what would be, if you've got that first property, for example, you've got your first rental property, let's say it's on a variable rate or something like that, what would you then go and do with the second and third property to actually help yourself leverage into that next one?
Let's look at your typical mum and dad, excuse me, let's look at your typical mum and dad, has their owner occupied home, got a fair bit of equity.
Yeah.
The best way to set that up, assuming they don't have a cash deposit for their investment, is to look at the equity inside that property and to set up a line of credit against it. Separate to their existing loan, because you need to understand the differences between one's tax deductible and one's not. And make sure you have, if they're just looking to buy one property, make sure within that facility they have a 20% deposit and enough money to cover the closing costs. So, easy example, someone wants to buy a $400,000 investment property. They might have $300,000 equity in their family home. You look to set up a facility of at least $100,000 against that, then a pre-approval over here for $320,000, which is 80% for their investment. The reason you want to do that, your own home should be like a sanctuary. You never want to place that under too much risk. By doing it this way, neither properties are linked to each other. If something, for whatever reason, wants to go wrong, you can always sell this property without affecting the family home. Then enables you to grow further from there.
Sure. Okay.
Let's say your goal was to buy 3 over the next 5 years. Ideally, you want to set that line of credit up because that's the lifeblood initially of your property portfolio of how you're going to be funding deposits. If you have the equity, set it up from day one to be able to buy those 3. In that case, you might look at $300,000 line of credit, which gives you 3 deposits of 20% and 3 times closing costs.
Would you do those separately or would you try and go straight into 3?
I think if you're just starting out and you're a novice investor, buy one. Understand the management of that property, understand the finance requirements of that property. Then once you're comfortable, by all means go faster.
But still set up the
Definitely.
the lines of credit as if you're going to go for 3, but start with 1.
The reason you want to do that is because you want to make sure, hey, what if lending requirements change? Get things set up with the end game in mind. And then it's easy to leapfrog from one to the other to the other.
Perfect. Guys, if you want to get in touch with Martin and you've got any finance requirements, your contact number, Martin?
Call the office 1300 090 298. Happy to have a chat.